Good morning, everyone. Good afternoon or good evening. Whatever part of the world you're watching from, this is Donna, and I'm here to drop a quick trade recap on the trade that I took here on UK100, which is this trade in particular. Which is this one. This is the full TP, and this is the before of the trade. So I'll be dropping a trade review on this particular pair. So first of all, this is UK100, and the first thing that I want to do, I want to know my directional bias or my order flow, either bullish or bearish. So for me to be able to know my order flow, I need to go to the higher time frame. So I quickly go to the 1 month time frame, and looking at the 1 month time frame, this pair has been bullish since. So the character of the pair is what steadily bullish. So what I did, I want to focus on a range. That means I want to put my focus between a high and a low, and what is being made inside of that range. That means inside of this high and low, or focusing on what's happened inside here. That will be my focus for that day. So this is on 1 month time frame. Looking at the 1 month time frame, I've spotted what a high and a low, and what was being formed inside of the low. Now looking at this structure here, I saw what a key level. I mark it out, and this is the liquidity on that key level. Because this liquidity mitigated this week, I picked the body of the key level and market closed above this candlestick, giving me what a sweep of liquidity, and this became my target for that month. So ever since then, the pair has been bullish. So my focus is no longer what happened here. I'm not focused on this range, this high and this low here. Just like what I said, I'll be focusing on what a range, what happened inside of this high and low. So with that in mind, so I'll delete this to make my chart clean. Now this is my target, this is my overall draw on liquidity, and looking at this thing here, we had what a sweep of this low, that's a liquidity, and this target here was made. And what I'll be focused now is what happened between this high and this low, this candle high and low. So that will be my focus for now, because this low has been taken out and this high, the target has been made. So quickly I go to the 1 week time frame. Looking at this on the 1 week time frame, I have to trace what happened. Remember that my focus is on this low and this high here. So I had to trace what happened below here. So what happened below here was market swept a liquidity according to the 1 month time frame and triggered from this key level. Market mitigated this key level too and bought. This is a sweep of liquidity. And market bought from this key level. Market bought from this key level here. So with that in mind, I know that this low is protected, and market sweep this liquidity too and triggered from that key level. So let me just quickly now market taking out this liquidity. I'm now focused on this low and this high here. Now I have to check what market did in between this high and this low. That's the range what market did, to check if we have any unmitigated zones, because sometimes market does something like this. If you have a trade, then if you have an inducement and market failed to sweep the inducement, it just kept on trending and take out the overall high, there is high tendency that the market will come down to this zone and pick a buy off from that zone, and this will be used as a trend line liquidity. and this will become my area of interest for the next buy. So this will be my interest for the next buy, and so this will be my next interest for the next buy here. And now for this particular one, this is my sweep of liquidity, and this low is what protected. I'll go to lower time frame to check what market did in between this high and this low. So I'll go to daily time frame. So on daily time frame, I've already seen, after marking out my on daily time frame was not clear, so I went to 4-hour time frame. 4-hour time frame, we had what? We had the sweep of liquidity, market bought from this other block here. A sweep of this liquidity, market bought from this other block. We had a sweep of this liquidity, market bought from this. We had the sweep of liquidity here, and market bought from this LVJ zone. And here was still an LVJ market bought from. So market picked a buy off from that zone and mitigated this key level for a buy. Now all I'm just left out with is what? This low and this high. Now looking at this low and this high, I don't have any clue that markets will either trigger from this key level here or this key level here. What I have to do, I have to go to the higher time frame to find my closest draw on liquidity. So I go to the 1 week time frame to know what this week is telling us. So this week I'm now focused on what? Remember this low here, and in between that low we have what? An fair value gap there. I had to mark my fair value gap, and market was already what? Mitigating the fair value gap and sweeping this thing here. Market took out this liquidity. Hold on. Market took out this liquidity here. When it took out the liquidity, it rejected this candlestick above this candlestick and closed above it. This is a sweep of liquidity, and this became my what? This became my closest draw on liquidity for this week. So I'll write this as a draw on liquidity. My focus is no longer what market happened, what market did all the way back here. I'm now focused on what between this low and this high, what market did in between the low and the high. That's the range. But before then, I want to see where markets picked a buy, where markets started buying from here. I want to see the point of interest that the market used as a buy. So I'll quickly go to the 4-hour time frame, and looking at it, it's still in alignment with what? With this key level or this one. So I want to be very, very precise of the one the market is using. Now I go to the lower time frame to check if market bought from any of the block there. So on the 45 minutes time frame, I found this watch. I found this engulfing candlestick that had what? A fair value gap in it. And looking at this thing here, this is a single candle liquidity, but I cannot call this a single candle liquidity because I'm not really sure of it. I go to the 30 minutes time frame to check if to define it again. So looking at it, it is what? It is indeed a pullback, and this is a surge up. Like this is a long candlestick, meaning that there was no pullback below it. This was the only pullback here, and this is an LVJ. Looking at this pullback here, I saw what? I saw this unmitigated block here, validated other block. And why did I say it's a validated other block? Because this other block here never caused a significant move. It was this one that caused a significant move by taking out what? By taking out this low. So that was where market triggered for a buy. Now I'm focused on what? I'm focused on this low here. I'm no longer taking a buy from I'm no longer expecting market to come down to this zone to take a buy from, to come down to this zone here to take a buy from, because this zone won't be used again. And looking at it, it was where market would pick the buy from, and using this thing here as an inducement. So everything that market did here was what? Was a trendline liquidity, just like the example that I gave you guys here, that this will become your liquidity, and everything that happened above it becomes what? A trendline liquidity. Now, so market picked the buy from there. What I want to do, I want to mark up my zones that market has already used for a previous buy. Here is where market mitigated the key level, and this is a key level too. This is the liquidity the market took and rejected above it. This was the target. So this being the target, market bought from here. This is a liquidity in the market swept and bought, and I have what? A huge pump at the upside, and this is a gap. I use my Gann box to measure the gap, and market what? Mitigated the what? Market mitigated the FVG. Now I want to be sure if market has really mitigated the FVG. What I didn't see any key level that market bought from, only a fair value gap. So, and I want to be very, very sure of what I'm doing. So I had to use my line chart to be very, very sure. Line chart wasn't giving me a clear data. I went to the 1 hour time frame. 1 hour time frame showed me what? A sweep of a liquidity. Hence, we have a sweep of liquidity and market triggers from an FVG. We can continue the buy because market has already taken out a liquidity and triggered from an area of interest. That's the fair value gap. Now all I'm left out is this low and what? This high. So market broke the high with what? Market broke the high aggressively, leaving us with a gap here. I mark this as my liquidity because that's a pullback. And every other thing that happened above the liquidity is what I call my trendline liquidity there. Here is my trendline liquidity. And this being my trendline liquidity, this inducement mitigated this breaker block. So I had to pick my breaker block from here. And my stop loss was at this start of this FVG. That's where I placed my stop loss. So market triggered from there and bought straight up here. This is the 1:6 risk to reward ratio, and looking at it, we've already we've hit our draw on liquidity for this week, and this was the trade before and this was the after. So that's it. I hope you guys learned one or two things from this trade recap. I'll see you guys on the next one.